Hello, it's Blockchain here coming at you with another technical analysis update. For those of you just tuning in, I'm primarily an Elliott Wave trader using other areas of Confluence and other technical analysis to really complement my price analysis. So without further ado, let's go ahead and dive into the charts. So before we dive into the charts, of course, we are starting on blockchaintrading.com, and I got a very exciting announcement. Scroll on down. Boom. The Blockchain Trading Masterclass. So just launching this today. It will be basically on sale for the week for $47 even, and once this course is over, it's going to go to $197. So this is for a pre-launch. But basically, it's going to be a live masterclass for 6 weeks. That's going to have different lessons within each session of it. And it's also going to have some PDFs, live Q&A. The only time I'm going to be doing this live, and like I said, a pretty screaming deal for $47 right out of the gate. The contents of the class here are going to be for some different oscillators, such as the RSI, and how the ranges can help spot trend reversals. We'll look at some hidden signals on the composite index, the derivative oscillator, a volume band RSI indicator that I like to use, a risk management, as well as some introductory to GAN analysis, and then of course my favorite, Elliott Wave. Lesson 6, we'll go into some fib retracement, some trend-based fib settings on Elliott Wave, and how to really predict the price. And then, of course, how to combine the oscillators with Elliott Wave to help predict price action, and then obviously a wrap-up. So just launching it today, guys. If this is something you are interested in, jump on over to the website. Hit that little guy right there, and I will hope to see you guys in the class. Of course, you can always find me in the Discord for $25 a month or $147 for a year, and which I am available in there, and that's kind of where I would ultimately like to start off. If this is the first time watching the channel, guys, make sure you guys jump onto the website and get my #1 trading strategy for free. Click this little guy here. It'll actually give you a video walkthrough of my #1 trading strategy that is consistent, profitable, and reliable to any market. All right, so let's actually jump on over to the Discord here. Just want to highlight a couple things from my last video. So I was looking at a few things for Confluence. This actually played out pretty well for this move up to the 1.618. A little green box there is where I had some shorts laddered in. And then keeping the group updated on potential move. So we could have potentially got a bounce up to the 210, up to 220. Obviously, that would have been my invalidation, is if we broke 210 right there. But was looking for a move down to the bottom of the fib channel, where it actually played out very nicely. Tagging that 198. Holding that short all the way down. So played out very well. Of course, I'm able to upgrade the group a lot quicker than what I can make a YouTube video. Go from there is it just takes up a little bit more time. So if you guys are not a member of the Discord, I hope to see you guys in. I'll also do updates from what I'm looking for as well throughout the day, and of course the masterclass that just launched today. So let's go ahead and dive into a little bit of charts. All right, so I'm going to start with ETH, and really ultimately what I'm going to be looking for. I'm going to do this pretty raw, honestly, so that way you kind of see where my thoughts are, things that I look for on the moves here. And actually, you know what? Let's actually start off on a higher time frame and take a look at where we're at. All right, so let's look at the daily. So the daily, we've actually been riding pretty much all the EMAs. We have the 200 MA right here that has been holding us up for pretty decent support. this move down is really kind of what we're looking for to see if this potentially would come off as a corrective move or if we're looking at something that is going to be a little bit more impulsive. Um, what I mean by that is, let's get our trend based. So if our move finishes here, come on. All right. Trying to turn the magnet up, but it is not letting me. All right, magnet staying on. All right, so it's gonna snug right up. All right. Let's draw that out. All right, so basically, if this was an impulsive move, we would be looking at this as a a 5-wave move up with one more leg to go. So basically, we'd have our 1, 2. This whole move would be our 3, coming out from the 4, and then potentially up again for the 5th to snag the top of this trend line that we have from just the most recent high. So again, only 2 touches, not overly strong on the daily, but I mean, we'll see if we can get back up there to finish off on a 5th wave move up. But that's where we'd be looking at for potentially something more impulsive. Now, if we had this to where we had it start at the low, you can see we tagged the 1.618, very perfectly. However, the problem with that is that would then turn this into a corrective move, just because you can see pretty clearly right here we have a 3-wave move versus right here is just a 5. So we haven't starting off with that ABC structure. And that would be the issue of having this be impulsive, basically meaning that this would be, an ABC, or overall just a complex correction on the way up. And just a big C wave going up to the top there. So that's where this would look off as coming corrective. Now we can still, again, kind of trail sideways, and what we'd ultimately, have happen is correct further back down to the downside. And then to get our targets for that, if this is a corrective move, let's shrink this guy over a little bit. Basically, what we'd want to look for is us to come back down and tag the 618.5. That tends to be also what's known as the golden pocket, for any kind of retrace. Now, if depending on what the overall move is, if say this is a sorry, computer's being a little slow, guys. So depending on what this is in regards to this move down being an individual completed 5-wave move, again, if it's a 5-wave move, it either starts with 5 or ends with 5. So if this was a completed 5-wave move down to where we started it off right here for the move up, then this would, we'd be looking at this as like a wave, or turning this again complex correction into a W, X, and a Y, potentially getting us again, another way of getting us back up to the top of that channel there. So basically, we would have something like this here. But again, ultimately, that would mean that we need to correct again to the downside before we can, officially kick off with a bull market, or a little bit more of a bull run. So if we get another leg up for ETH and we break that 230 mark, then I'd be, considering that potentially the 5th wave. Ideally the 5th wave target would get us up between that 265 to 250 mark. We can get a little bit more specific as we see some wave structures play out. But that's where I'm kind of leaning a little bit more towards, this being on the corrective side, mainly because it lines up better for us to tag that 1.618 being a 3-wave move versus it being a 5-wave. It is possible that it could be overextended, but the symmetry of it is it's off a little bit to me. So it's, in my opinion, still looks a little corrective, meaning that we would either need to have this be a like I said, a WXY, or potentially just an ABC, zigzag, in which we could still finish off, right here around the 140 mark for that 618 or the 0.5 pocket. Okay. Let's look at a couple of the different oscillators here. So, not getting a ton of movement. Obviously, we've been kind of trending sideways, which can be typical for a 4th wave, where we consolidate sideways for a little bit, or potentially a B wave. We normally don't see A waves turn into wedges or triangles, particularly such as this here. So that is kind of it's an interesting formation for where we're at. We have the derivative oscillator is losing a little bit of downward momentum, obviously with today's little pump up. So it looks like it wants to get a little bit more play to the upside potentially. Then you can see on the RSI, we've just been getting pretty squeezed here. Not a ton of action overall within here. You see we've been bouncing off of the EMAs within there, and this is kind of where I would like to get a little bit more confirmation if we are going to get some more movement up, is if we do break this green EMA, which is the fast. If we do break this one here, that would give me a little bit more indication that we are going to have a little bit further upside. And then also here on the CB index as well, you can see they're coming together, and if they bounce off of each other right here, meaning that the red will kind of pop back up and the green will get further down. Again, those are the fast and slow EMA indicators. If they do bounce off of each other here, that would be a little bit more of a bearish sign, versus where if they cross and we get the green one start to move up, that would be a little bit more bullish in my opinion. All right, so let's go ahead and dive into a couple of the smaller time frames. So if we look at the 4-hour here, a pretty neat tool if you guys haven't used it yet. I've been coming, I think it's here, it's underneath my picture. Let's see. Yep. All right. Is this guy here, and this is the fib channel. So if you guys haven't used it yet, I would recommend it, especially if you do anything with Elliott wave. Again, just because it helps with some areas of confluence, if that is something that you're looking for, potentially struggling with, this will help with that. But basically, you draw it from your highs to your most recent low, and you kind of see how nice it plays out, where we get some reactions, especially if we're in a channel where we get some pretty decent reactions off of the fib line. So as you can see, we're up here, still trying to figure out what we want to do. We've been up here, we've been hitting our head on the top of that particular trend line, came back up, retested it, double topped right here, got rejected. Now we're coming up, and you kind of see right here, this whole area right here where this was support is now resistance, where we're at currently. If we do break that, then again, we're going to be at the top of the channel at roughly around 210. But again, you can see right here where this was our support, it will then be resistance. So we would want to make sure that we break through with some conviction if we're going to even talk about trying to get back up into the 220, 230 ranges. Overall, we can still have some contracting formations without it being actually a true triangle. So that magnet, I'm telling you. Yeah, it just does not want to let me turn this guy off. All right, I'll deal with it. All right, so we can still have a contracting formation without it being, a true actual triangle, right? But I'm looking at this overall being a three-wave move down. So basically that guy being an ABC. Overall, pull the fibs for it. Getting, it did come down and tag the 1.236, but, overall held that support area, especially on that EMA on the 1-to-1. So a pretty standard, flat correction. This guy here would be looking as, again, another ABC, as it would end up being a double zigzag for this move up. And that guy, boom, boom, boom. And then that kind of leads us to where we are currently. Now, we can still have somewhat of a triangular formation without it actually being a triangle. Or we could potentially come down and do something like that. And then have us come down, find a little bit of support again, and then blast off that way. That is absolutely another option that we can have. In my opinion, kind of the only thing that is making sense to me out of this particular guy here, just based upon how we're moving and kind of consolidating, trending sideways. Because if you look at this move here, this does, in my opinion, look like a 5-wave. So if that's the case, again, if it's 5 waves, it's either the start of something or the end. Where we could potentially come down, do something like that. Again, I have another ABC flat correction here in the middle. And we end up doing something like that. But both are, leading me to believe that there's, we still need to come back down and reset roughly around the $200 mark, find that as support before we do continue to move up. If we do continue to move up. So I'll be looking for a retest somewhere around that $200 mark. Before we do move up, we absolutely can, especially if this is a flat correction right here. So let's pull the fibs on that guy real quick. The magnet tool is messing with me still. We're at the 786, and if whatever reason does like to tag the 786 in its corrections, but we can still get that pump up tag to 1-to-1, or even break the channel, and being if this is a flat correction, come up and tag the 220 mark. It's just at the 1.618. But from where we're sitting right now, we tend to be right underneath some pretty decent resistance, as well as looking at the 4-hour. Again, derivative oscillator is losing momentum. We are getting shut down at the top of the volume band here. Not really seeing any kind of divergence. I mean, maybe a smidge here for potentially some bearish divergence, but not really seeing it anywhere else or anything like that on a 4-hour. So yeah, that's my thoughts of where we are on the 4-hour. We do have these two indicators for the fast and the slow EMA, which looks like they are potentially about to cross. We still have, let's see, So I almost have about 3 hours in this particular 4 hour candle. So that can absolutely change. This can change. And even this guy here, we're kind of at the point where we've got to decide if we're going to, get another push up, or if we're going to come back down, reset, and then, ultimately get another push up. But if that's the case, depending on how we come back down, if we find support here and then take back off, I'd be leaning more towards the ABCDE. However, if we come back down and we do break this support at the 199, I'd be looking at this as being more of the ABC like this. If we lose that $200 mark again for ETH, I'd be again looking for us to come back down and reset some potential lows. Again, find the bottom of this support channel. Again, that 180 mark was pretty strong, um, but losing that $200 mark again would be pretty bearish in my opinion. Depending on the timing of how it all plays out. We do have this EMA coming up, which potentially would be right here in this area as well, again, to help give some support on that particular move down. So, another move up from here. We kind of just been sitting. We haven't really come back down and reset. It's looking a little tough in my opinion to just blast off. Whoops. To kind of just blast off through here and come back up, but we can definitely come back up, go through there, come back down, retest, and find some support on the top of the channel, and then potentially trend sideways for a little bit, hit this trend line, and then blast off again. That way to create some new highs. But generally, we don't just from this little consolidation, we normally just don't get another quick pump up all the way through. We normally will get some drops and we'll get some buy ups again really quick, kind of like how we did here, or even how we consolidated here. We had some drops and got bought up. Again, right there, we dropped, got bought back up, and give us the pump. So, not a lot of movement at the moment, which is kind of just again leaning me to be a little bit more bearish at the moment. So we'll see what it ultimately turns into. But real quick, we'll take a quick look at the 15-minute, and you kind of see how easy this can turn into the ABCDE. I don't want that one. I want this one. And again, the ABCDEs do tend to be either fourth waves, or they tend to be B waves. So this particular guy here, this being that it's a double zigzag, could be your A. This could be your B, and then up again as a C wave. But really, ultimately, it just comes down to what we're looking at here. If we continue to get that pump up that I was looking at on the 4 hour, or if we get the reset and find the support. So ultimately, that's what I'm going to be looking for, is if we break the support down here or if we break the resistance up here. That's ultimately going to be what's going to be my indication and help change my bias a little bit from bullish to bearish. And again, like I said, it doesn't need to be a true triangle, because if you look at RSI, even flip it to the 1 hour, generally we'll want to see the RSI match a structure of a triangle, or where it's contracting versus expanding. You can see we do have some bearish divergence on the RSI between this point and this point. And also what's interesting is on the RSI for the volume bands, where we broke out, we came back up, and we failed to break out of it. Zoom a little bit on the 1 hour so you can see it better. So right there, so we broke out, came back, and we retested it, but failed to break out of it again, and we lost the support of that EMA. So again, that's kind of making me lean a little bit more to the downside, that we need to come back down, reset a little bit before we can ultimately blast off. Kind of same thing, the derivative oscillator, we are getting a little bit more downwards momentum. And same thing on the CB index, where looks like we have our EMAs getting a little bit closer together. We did lose support on both of those as well. So pretty interesting, but giving me a little bit more support to have one more little drop. Again, we don't always need to come back down to the $200 mark exactly. If this can turn into something a little bit more bullish, I guess, if this isn't an ABCDE, where this right here, being how aggressive this wave is, could be, potentially a wave one, kicking us off for a 5 wave move to finish off that more of a bullish structure on the higher time frame. So overall, guys, that's what I'm looking for. It's, once we break this, I'll be looking potentially for a higher move up to, potentially back up to the 220, 225 range. I'll throw a few lines on there. So, boom. I'll highlight these a little bit better. Make it a little bit bigger. All right, some potential zones to watch for on the upside. And then, of course, if you guys see my video for the #1 trading strategy I use, obviously we'll take a look at the pivot points. Again, pretty close within that same range. Some would be definitely on the higher end. We'll have some support right there first at the $200 mark. And we'll put one on just in case we get that low pretty quick. All right, so overall, these are the ranges that I would be looking for here in the near term future. Again, leaning a little bit more towards coming back down, retesting that $200 range before getting potentially some more momentum to get back up towards the 210 area. If we do lose the $200 support, then we're looking at roughly the 192 to the 186. Making this be more of a ABC. Because we'd ultimately end up moving back down on a 5-wave structure if we break this, because it would be pretty aggressive. So that's what we'd be looking for. Again, right there, the 618 right there, pretty good confluence for the 191, 192 range. That 786 mark, which I told you ETH does tend to like at the 186. So ultimately, that's what I'm looking for, guys. But ultimately depends down to what our decision is here and how we move from here. So if we move down on a 5-wave structure, I would expect us to break this, versus if we come down correctively, versus a 5-wave. Making this a 3-wave structure, making it corrective, is then I would be a little bit more interested in kicking off from this $200 support and getting back up towards the $211 $210 mark. All right, guys. So hopefully I'll see you guys in the Discord. Feel free to ask me some questions, throw your thoughts, and of course smash the likes, hit that subscribe button, share, and hope to see you guys in the masterclass.